The beginning of the quarter, we saw some numbers that maybe suggested the growth was kind of coming off. And now we're seeing some numbers out of China that suggest, wow, it's really still hot there. And so it's really confusing on top of all these other confusing signals for what's going on with Tesla right now.
It sounds like a lot of it is on market share, but isn't Tesla losing market share, particularly in Europe as competition ramps up?
JJ, have your clients been buying some of the big cap tech names, including Tesla, on the pullback of late?
Absolutely. Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, I'll be reacting to various clips of people within the mainstream finance media, including stock analysts and the talking heads on CNBC, sharing their thoughts and misguided opinions and asking some really dumb questions regarding Tesla and Tesla stock. Now, I'm not here to be a hater. The point I'm trying to make with this video is if there's a disconnect between the reality and the perception, people think Tesla's this, but it's actually that. People expect this amount of growth when it's going to be this instead, etc. This, in my opinion, can present some great buying opportunities for smart, savvy, intelligent, meticulous, long-term investors. So with that said, let's get into the video. But first, hey guys, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Craig, I'm almost grateful for just the 1% move right now, because how much can investors be expected to understand valuations when the stock price is moving 20% day to day?
Yeah, understanding valuations, I think, is an interesting topic. Tesla's been valued recently at more than the total value of the U.S. and European automotive market combined. So at this point, I think valuation is not really the main game. I think people are playing technicals and trading momentum. And the external factors from the yield curve, the anticipated changes in the yield curve, are really more what's driving the stock than valuation. So
all right, but if we argue, let's at least deal with direction. If the valuation trend is higher, is the street rightly folding in things like data from autonomous driving, batteries, electric grid? Is the street thinking of the name holistically enough?
Yeah, so the bulls all believe that there's a lot of value in the software in the Tesla cars. They're dreaming of $100,000 in value per car, robo taxis, fully autonomous driving. And we understand that Elon actually talks, when he thinks he's far from Wall Street, about taking on the railroads with his autonomous electric trucks somewhere out in the future. So there's a lot of sort of lofty dreams around Tesla. So the bulls, they hang their hat on what they choose to hang their hat on. I'm not a bull. I'm a skeptical guy, so I don't see much evidence for that playing out that way. But I understand why the stock is moving. People are buying it off a technical level, and they have pretty aggressive long-term expectations.
Funnily enough, Craig and I are both extremely skeptical, yet through our skepticism, we've come to opposing viewpoints on Tesla stock. I'm a huge bull. I've been all in on Tesla stock effectively for the last half decade. Meanwhile, Craig's skepticism led him to initiating a sell rating at a $70 price target on Tesla stock just over a year ago. Don't worry guys, he's since doubled his price target and then some to $150 per share, about 25% of where we are today for Tesla stock. Now, why would two skeptical people come to polar opposite conclusions about Tesla? Quite simple. In my case, I dig and dig and dig and dig and dig before I make any conclusions. It appears that I've been digging and digging and digging and found sufficient evidence to believe in Tesla, the company, the plans, their future execution, etc. Whereas Craig, in his skepticism, has just dismissed this without really doing the digging, in my opinion. Now, I could completely be wrong here, but I think Craig is a little blinded by his own skepticism, and it's preventing him from digging deep enough. You know what, Craig? If you're skeptical about a company, and by the way, this isn't just to Craig, but to everybody watching, if you're skeptical about a company or an idea or anything, don't dismiss too early unless you're willing to overlook that opportunity, Now, in Craig's situation, because he's out in the media talking about Tesla, I don't think he has the luxury of being able to dismiss an opportunity too early. He should dig deep enough until he really thoroughly understands what he's talking about. And in my opinion, Craig is too skeptical to even get to that stage. Like, oh, there's no way their market share could be that big. There's no way a car could be worth $100,000 with full self-driving software. This, I think, is the mistake that Craig has made. His skepticism has blinded him to actually digging deep enough to know whether or not his skepticism is well-founded. And in my case, my skepticism has forced me to dig deep enough to know that I'm on really solid grounding.
Yeah, it's painful not to be a bull, at least to the ego in Tesla over the last few months. And so, Tim, it's been about 4 months since Tesla went on this astounding run. I'm going to use the word astounding because it's about the most neutral one that I can find. Do you think there's perspective to be had on exactly why it's gone on the run, what it means, and kind of what that says about what Elon Musk and the company have to continue to do not to get trapped in this trade?
Yeah, well, it's a momentum story, right? And the first quarter has traditionally been for Tesla a very difficult one. It's where that lofty idea runs into the cold, hard reality of making cars. And for a lot of reasons, they struggle in the first quarter. And Elon hasn't really shown a consistent ability to make profit or see sales growth the way Wall Street wants to see in that first quarter. And so this is the big test here, right? The beginning of the quarter, we saw some numbers that maybe suggested the growth was kind of coming off. And now we're seeing some numbers out of China that suggest, wow, it's really still hot there. And so it's really confusing on top of all these other confusing signals for what's going on with Tesla right now.
So I'm going to let you guys in on a secret. This is a big one. Make sure you're sitting down for this. You've got your notepad ready. This is real important. Okay, ready? So it is possible to be confused about something that itself isn't actually confusing. You see where we're going with this? That's right. So oftentimes people who don't have a thorough, detailed understanding of Tesla, logistics, etc., they will see a headline, they'll see some data like sales have halved in Europe this quarter. They've quintupled in Timbuktu this quarter. What's going on? Do they have no demand or too much demand? I don't understand. But if you dig beneath the surface, again, remember that skepticism I talked about earlier in this video. If you're skeptical, why would there be such crazy variation? You're skeptical instead of going, there's no demand because the sales in this particular country were half what they were last quarter. Instead of making assumptions like that, dig a bit deeper, be skeptical. What could the other reasons be? Could there be other reasons? You dig deep enough, you might discover, I get it. Tesla only has factories in 2 countries, yet they're delivering vehicles in dozens of countries. That means, depending on how many vehicles are put on which boats shipped to which countries in which month of which quarter, there's going to be huge variations in deliveries month over month, quarter over quarter in every country on the damn planet, including the countries where vehicles are locally produced, keeping in mind that some of those will also be exported. So with that in mind, it's nonsensical to pay attention to deliveries in this country or that country month over month, blah, blah, blah. Instead, we should just focus on one really simple, obvious, in fact painfully obvious number instead. Is Tesla delivering more vehicles in total quarter over quarter on Earth? Not in XYZ country, on Earth. That's all you got to focus on, right? That's literally it. And then it's no longer confusing. It's like, oh, well, they keep delivering more cars every quarter. So then they're growing. Pretty simple. I mean, that's literally the only thing we need to pay attention to there. There's many other things as well, of course. There's factory shutdowns, there's maintenance, these kind of things as well. So there can be lots of other things that can influence Tesla's deliveries in a particular area besides, wait for it, demand. Again, so it's not actually confusing, but you do need to think a little bit and really understand what's going on there. You can't just take a cursory look and go, okay, sales down this quarter, this month, no demand.
Mizuho just initiating coverage on Tesla, buy rating, $775 price target, calling it a 100-year disruptor. Joining us now is the analyst behind the call, Vijay Rakesh from Mizuho. Does your initiation, does the timing here of your bullish call have anything to do with the fact that the stock had an unusual few weeks, down more than 25% from the highs?
Thanks for having me on, Sarah and Wilfred. We obviously have been following the EV market and we like the space. But I heard on that Squawk on the Box, Squawk on the Street this morning was questioning my valuation on Tesla. And I wanted to explain that a little bit, how differentiated we are. I think we look at Tesla more as a technology company rather than automotive OEM. We think the keys to the EV market lies in the battery leadership that Tesla has, the ADAS and hardware leadership that Tesla has, and also the vertical integration. And with that leadership, we think they can get to 10% share of the automotive market by 2030. And that's not that's very achievable, because if you look at the market today, Volkswagen, Toyota, all of them have 10% plus share. So it's very easy for Tesla to get to that kind of share by 2030. And we get to a sum of parts for Tesla using that to about $845.
Number of questions there based on your call. One of them is, it sounds like a lot of it is on market share, but isn't Tesla losing market share, particularly in Europe, as competition ramps up?
Fuck my life. She did. Just, oh my God. Did we just literally just, you know what, guys? How much does a CNBS anchor make? Well, it looks like somebody is earning her keep, and of course we know we can believe everything we read on the internet. So, but of course, guys, I'm having a little bit of fun here. In all seriousness, though, these kind of questions, it's like, bro, they're selling more vehicles every quarter than they did the quarter prior. Like, do you need to know anything else? No, you don't need to know anything else. That's literally all you need to know. But CNBS, I mean, an anchor, they've got to stir up some drama, some uncertainty, a bit of fear. You know, if it bleeds, it leads. It's really important to make people worry, feel uncertain, unsure. But if, as a smart investor, you can dig beneath the surface, you have an advantage over the people that get their news from CNBS. And of course, the BS is intentional, if you guys haven't picked that up. I know there's some people still sometimes say, it's like, bro, it's CNBC, dude. I'm like, did you not think about... Okay, cool, yeah, so the BS, as in bullshit. There we go. Yep, a little bit of inside insight for the few people that haven't picked that up yet.
So if you look at Tesla, they have only less than 1% share of the total LVP market. If you look longer term, we think they are growing at a 50-60% CAGR on the top line. They can easily grow to 10% share of the LVP market if you look out just 10 years. And what can drive that is also their cost leadership, because they have their own hardware, their own battery. What will basically hold back a lot of the other OEMs is battery supply. They have to depend on third-party battery suppliers. They have to depend on the technology with the third-party battery suppliers. In Tesla, they own the battery supply. They have their own technology. It's 50% cheaper than what you have out there. So right there, they can have a big cost leadership versus many of the competition, the legacy guys. And if you look at battery, it's 30% of the cost of the EV. So getting the cost right, getting the supply right is key to leadership. So in the near term, might be quarter to quarter, you have these fluctuations, but I would say focus on the long term. This is a big disruptor. You're missing the forest for the trees. They have their own technology. They control the entire supply chain, from hardware to software to battery to chassis, and they can really cost down well ahead of the competition.
Singing my song here. It's great to see another analyst initiating coverage on Tesla stock who actually understands the company well enough to realize that it's critically important to be modeling out at least 10 years into the future, and they believe that Tesla can sustain a 50 to 60% compound annual rate of growth for years to come, ultimately getting to a 10+% share of the total global vehicle market by around 2030 or so. And now we're going to hear from the managing director of TD Ameritrade, sharing some insights into the activity of the investors on their platform who apparently have been buying Tesla stock because, well, they might be a little bit smarter than a lot of the analysts and talking heads on the mainstream finance media.
JJ, have your clients been buying some of the big cap tech names, including Tesla, on the pullback of late?
Absolutely. It's interesting when you see volatility in the market. A couple of places our clients tend to go. We've seen it even through this, last month, through this week, Wilfred, is the FANG stocks, along with Tesla and Microsoft. So when people talk about technology and selling tech, I think you have to separate that out a little bit. Those more established big cap technology stocks are actually the trusted ones during times like this. And Tesla, maybe it's the CEO a little bit, as well as people believing in the technology, etc. People want to be involved with Tesla. With that, Wilfred, we've also seen a bit last month, and particularly over the last few days, is the buying of NIO along with that. So NIO gets a lot of halo effect on the upside from Tesla, and our clients have come in to buy that one.
Just when I was ready to compliment the really smart Tesla retail investors out there buying Tesla stock as it recently dipped up to 30+%, I hear in the same breath, unfortunately, that there's a fairly strong correlation between NIO stock and Tesla stock, suggesting that there's a lot of brain-dead retail investors out there who are buying NIO because Tesla's executing well. That makes sense, doesn't it? what are these people doing? By the way, not hating on people who own NIO stock. It's okay to own NIO stock. But if there's a correlation between the price of NIO stock and Tesla goes up, NIO goes up, that indicates that there are a bunch of dumbasses somewhere out in the marketplace that are buying NIO stock based on Tesla's execution, which is, I mean, really not a smart thing to do. So here we are looking at the NIO stock price chart compared with the Tesla stock price chart. The correlation between these two is super disturbing. As I've mentioned, they're completely separate companies. They have nothing to do with one another. So the stock prices, if the market was rational and logical, which we all know it's not, at least not over the short term, the stock prices should be completely independent of one another. This correlation here is really scary, and it does suggest to me that there's a lot of people who aren't doing a whole lot of thinking before they're buying these stocks. So quite a mixed bag here, really illustrating that there's still a lot of confusion out there in the mainstream finance media, even among analysts and retail investors about Tesla, the company, and Tesla stock, where it's headed to from here. We saw Craig Irwin in the beginning there, $150 price target on Tesla stock. Then later in the video, we see a $775 price target. I mean, this is a huge discrepancy. And of course, the correlation between NIO and Tesla stock really shows that not all retail investors out there are as smart as they think. Or maybe they're so smart that they've realized they don't actually need to understand the company. They can just invest in everything in the EV space and make infinite money because EV stonks only go up. And the moral of today's video? Oftentimes in the stock market, when there's confusion, there's a lack of consensus, vastly differing opinions about a company, the future, their products, the technology, the total addressable market, blah, 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 blah. At least in some cases, there can be enormous opportunity for investors who are willing to dig deep enough and uncover the ground truth. And I'm willing to bet many of these investors, the kind that really do dig deep before making any decisions, were among the investors buying Tesla stock in the recent dip. Let me know in the comments below, did you buy Tesla stock in the last couple of weeks? If so, how many shares did you buy? And if not, why not? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like to help out the channel and get up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.